Hi all and welcome to the STEM Roundtable today with the topic of bridging the gap between investors and founders. And with us today, we have people from both sides of the ecosystem, founders and professional investors and industry participants. And just to get started with, I will ask everyone for an introduction as to who they are, the firm they're from, and their duties at that firm and their position. And again, the outcome of this panel, just so it's very clear to the audience, is to give you an insight into the mind of an investor when it comes to investing in STEM companies, but also insights from founders who have successfully done it themselves. And that's why everyone is here today. So just to start with some introductions, and we'll start with you, Stella, if that's okay.
Yeah, sure. Hi, everyone. I'm Stella Zhu, and I'm a senior associate at Main Sequence Ventures. We're a deep tech specialized firm, which means all our portfolio companies have some sort of connections with Australian publicly funded research. Our mission is to solve the greatest challenges in the world with science, because we truly believe that the research gives the companies an edge in the very competitive global market. And it's great to see a lot of founders coming up with great ideas that is really solving the insolvable problem with new technologies. We have invested in 40 companies by far, raised our second fund this year, and have been investing quite actively in the market. We are now a $500 million fund. Very happy to chat with any companies that's playing very active in the STEM field.
Excellent. Thank you very much, Stella. And that's a great shout out to the audience, anyone who is interested and falls into that category to reach out. HH, just keeping on the investor line of things, would you like to give a brief introduction as well?
Sure, Sidney, and thanks for inviting me to be here today. My name is Hsien-Hui, or HH, as most of you will know. I'm the head of investments for SG Innovate. We're an early stage investor in emerging tech startups. I don't want to use the term deep tech because I think Stella has already used it. Our coverage is global in nature, so we're not just confined to particular geographical regions. We're backed wholly by the Singapore government. We've been a fund for about 5 to 6 years, with about 80 odd portfolio companies and about 6 to 7 exits through SPACs, through acquisitions and the like. Ironically, in the last 1.5 years has seen the most exits in our portfolio for a variety of reasons, obviously, at very decent returns. Areas that we are focused on, obviously deep tech or emerging tech is a constantly shifting target. So at the current moment, our focus is very much on biotechnology, agri-food tech, advanced manufacturing, which includes semiconductors, additive manufacturing, and of course sustainability, because that's what everyone is talking about. So things like hydrogen economy, circular economy, all these things would be very much of interest to us. Personally, I was a founder myself, so I understand some of the challenges that founders face today. Exited my company, it was in the AI space about 15 years ago, and then I sort of bummed around in SMEs, MNCs before landing in this Singapore government fund. Thanks, that's all there is.
Thanks, HH. And Peter, we'll go to you at the end because you've come from the founder perspective. We're going to actually start with you, but just Michael, just your introduction in line with that as well. Thanks.
Yeah, sure. Thanks for having me, and great to be with all of you, and thanks to Wholesale Investor. Mike Sullivan, chairman of Horizon 3 Biotech Fund. We're a purpose-driven fund investing in companies tackling global health challenges using leading-edge technology. Right. So we are Melbourne-based, invest globally, have 4 portfolio companies so far, and what I do here is run fund strategy, capital raising, marketing, branding, team, governance, and we've got an experienced investment committee full of life sciences experts that do deal sourcing, DD, and negotiation. So I can talk from both sides, on the capital raising side as well as the searching for investment and DD side as well.
We'll definitely get you to switch hats throughout the panel there. Thank you, Michael. And Peter, finally with you, if that's okay.
Yeah, thanks, Sydney. Great to be here, everyone. Peter Vranes, co-founder, co-CEO of Nutromics. We're developing a wearable medtech device that can monitor any molecular target continuously and in real time. We've got about a dozen sensors that we've already developed. And we're a team of about 20. We've raised about $10 million. For about 4 is non-dilutive grant funding. We've just recently completed a raise of about 6 million. And we'll be going to the market middle of next year for about a 30 mil plus raise. What we're all about is a world with 0 preventable deaths due to a lack of timely molecular patient data. It's a really big problem. It permeates throughout the whole healthcare system. And we have a technology that can solve many problems in healthcare that is born from this lack of continuous molecular data. So if you think about what continuous glucose monitors have done for diabetes, it's a $4 billion technology. Spawned companies like Dexcom that's currently valued at $52 billion. We have a technology that can go well beyond glucose to any molecular target. So it is a seismic evolution in precision medicine.
Excellent. And Peter, just hearing that, then it's no surprise you just raised 6 million as well. So let's start with that. Can you explain to, because I've actually spoken to Warwick before, who he came on for a CRIISP Media podcast recently, and we'll start from the founder perspective because that's the general audience here as well today. You just came back from a successful raise, and so you have some wisdom to depart to the audience as to what you did to raise that capital and how you pitched, and perhaps any pivoting strategies that you had to take, that you had to undergo in order to make it successful. So can you talk to us about that journey and how you initiated the raise with investors, given the very technical nature of STEM? So I guess the type of investors you spoke to, just to summarize, and how you approached them at the beginning. And then we'll get some feedback from the investor panel as well.
Yeah, it's a good question. When I speak to entrepreneurs about investing, there's one key message: always be in capital raising mode, right? This is not you start and you stop and then you forget about it. If you're a startup, you always have to be in capital raising mode. Just the intensity changes. That's the number one takeaway that I want people to know, because it's so important. You think of it, if you can't knock on a door and ask someone for money that doesn't know you, this is a trust business. They have to they're going on a journey with you. And if you knock on a door and say, hey, you don't know me, but I've got a great business, do you want to invest? That's not the way to do it. You want to take them on a journey, and you want to show them, you want to tell them what you're going to do, then you want to do it, and you want to keep doing that. So you want to show that you can execute, that you're trustworthy. You need to be transparent, and you need to be warts and all. Like, we do a monthly newsletter. It's the good, the bad, and the ugly, right? That's what we call it. And we give it to them straight. And they're okay. The fear that investors going to see something and they're not going to want to talk to you, it's the fear that actually drives more investors away than the topic you're trying to hide, right? Just be transparent, tell them the warts and all, and you'll differentiate yourself straight away. Yeah. But I just want to say that because I just think that's just the really important thing, and a lot of companies don't do it, and it's to their detriment. So for this raise, we try as much as possible to use warm intros. We did some cold outreach, but it's a slog. Yeah, again, everyone here, I'm sure, gets lots of emails from people you don't know selling your stuff. I don't know about you, but most of them I don't follow up with, because otherwise that's all I'd be doing in my day. So warm intros is really important, and that's really a test of the entrepreneur. Are you able to get a warm intro? Because if you're not, do I want to invest in you? That's a little test, right? So the ability to do that is important. And then really, if you're taking the position of always in capital raising mode, it means you're reaching out at a time you don't want money. You don't need money. You're talking to them to say, hey, I'm not taking anyone's money here. I'm just introducing our business. We will be going to the market, but I want to take you on that journey, and do you want to come? Yep. And that is a much nicer position than, hey, we're running out of money in 4 months. Can you're almost desperate. You can sniff the desperation on a company when they're in that position.
Great. And I can understand that it's similar to getting a call from a salesperson to renew your subscription 1 month before it ends and knowing that the real reason why they're calling and where were they for the last 12 months. So completely understand, Peter. Now I'm going to take that and ask the investment team here. So let's start with you, Stella, because something Peter just said there was quite important. And I know it relates to main sequence because Mike, the partner at Make Sense, Mike Nichols has mentioned this to me previously. His want for transparency in the process, the good, the bad, and the ugly, and that was there not only to show that the entrepreneur is honest, but also the entrepreneur is almost hyper aware of the risks and is already mitigating those risks accordingly. Do you resonate with what Peter said?
Yeah, exactly. I think for the company perspective, it's always good to bring us along to the journey. I agree with Peter. Especially, I think it's creating that experience to see how the team execute and how they're growing a business effectively. And MenSequence take a relatively more proactive approach in working with the companies, in the sense that we usually will take a board seat and we will work with the founder quite proactively in terms of building, bring in the talent, building a team, as well as a strategy. So it's great to see how they execute along the way. And at the same time, I always find people who can create you a good experience and show their dedication with their actions is very strong. It's really strong when you say, I'm going to do this in the next year, and you achieve that. That brings people a lot more confidence in your ability to do what you're going to do in the future. And it's fine to have problems that you need to overcome. That's just the nature of creating a company.
Absolutely. And so 2 key points here: honesty and obviously a newsletter aspect to constant investor relations, and as Peter mentioned, to constantly raise as well, or be in that capital raising mode at least, so that investors know that you're not just coming for them for the capital at the point of the raise, but you've been in touch with them throughout the entire journey. Now, thank you, Stella, for almost reaffirming that and telling us how Main Sequence does that through their own methods. HH, I'm going to go to you now and see how you relate, similar to how I've connected it to Stella. Is this something that you see as important when dealing with your portfolio companies?
Yeah, and I think transparency and honesty is vital. The truth is, during the due diligence process, all the warts are going to come out anyway. So it's best that you be upfront early on. And if the investor can't stomach it, then they're probably not the right partner for you. We like to have that sense of honesty and collaboration with a startup founder, because as Stella said, it's not possible for a company to be completely formed at the very early stage. There are definitely going to be gaps that they need help to fill and all that. And it's better that we understand the weaknesses of the companies before we make the investment. We have a development team that comes under the investment portfolio that I run. And that development team actually tries to identify the kind of training, the kind of engagement that's necessary to plug those gaps. So it is actually in the best interest of the founder to let us know what the problems are early on. And hopefully they actually know what the problems are. So the most terrifying thing for us is that the founder themselves don't know that they have these issues, that they are, that they are the best at what they do, and therefore, they don't brook any dissent in the approach that they take. That to us is actually a deal breaker. So I think these are things that probably permeate across the whole venture capital industry. So I'm not basically saying anything new, but it is definitely something of importance to us.
Yeah, and obviously the risks are monumental when it comes to STEM as well, in terms of execution. And so I guess a way of portraying that for any founders watching is a risk, or at least something in their deck or their presentations, or by whatever means they are presenting their opportunity, is a risks and mitigations aspect to that pitch. Now I'm going to go to you, Michael, and ask, because you're uniquely from both sides of the ecosystem, aware of how this works. So when you're raising capital, how are you ensuring that the investor relations is intact and almost fertile ground for that raise? And also on the opposite end, as an investor, sometimes in the investor mindset, what do you like to see from the companies coming forward?
Yeah, thanks. I loved Peter's answer and the builds. I'll touch on one thing Peter said that I think is great. I mean, I call it talking to fear. You know, so I think when you're asking people for capital, you got to say, this is venture capital, private equity, it's high risk, it might not go well. But then you also need to get them excited about the opportunity and the aspiration. I think that's really important. That's what people ultimately end up buying once they understand that you've got a plan to manage the risks and they go in willingly. I think in terms of how buying decisions or how the buying process works, or what a family office or a wealth manager or an entrepreneur's own investment decision process is, I think you have to ask questions about that when you're asking for capital. How does the investment committee work? How often do they meet? You know, what is the process to get there? Because every organization's different. And then you might have different buying influences or people that you need to talk to on the way through to make sure your bases are covered, because it only takes one ancillary comment that's actually not even material, but somebody had a bad experience with somebody who's a non-exec director or just offering advice, and that actually makes investors pause and say, well, is this team really worth backing? Because early stage especially, it's a lot about the founder, the vision, the team, and whether they can pull in good people to help them. So I think that's critical.
Thank you, Michael. And Michael touched on something that I want to expand upon with you, Peter, and that's essentially the fact that there are different conversations with different investors and different organizations, as you put it, Michael. As it is very individualistic in that a no from one investor doesn't mean a no from all the investors, which is a key bit of a key bit of information that a founder should keep in mind when they are presenting, and not to feel so dejected after the first rejection. So, Peter, did you experience that with a different communication style depending on different investors? Can you give us maybe an example of that, if that's okay?
Yeah. If you're worried about rejection, don't be an entrepreneur. I mean, you got to get lots of it. You will quickly steel yourself to it and be okay. Just again, walk into the fear. Don't worry about it. You know, it's par for the course. We had this round, we had 70, the last one we just passed 70 investor meetings. And a lot of them were no's, but not no forever. It was we were too early at that time for a lot of those funds. So, you know, a lot of the US ones like Andreessen and Arch and Founders Fund, and, you know, they wanted to see the next step, which now they're in play, all those guys. And it's good. You want to do your homework, obviously. You don't want to go cold into these meetings. You want to know who you're talking to. You want to get their background. Are they technical? Are they financial? Who is it? You know, you got to be professional about how you handle this, because you change your communication style accordingly. So someone that's if we're meeting up with a team that's you know, they brought in some, you know, deep tech advisors, or they're you know, very technical, then yeah, we might bring in one of our technical people, for example, into that meeting. And so you just modify it. So it's really just about doing your homework, knowing who you're talking to, and maybe even just before you actually have that meeting, if it's a first meeting, ask some questions. Just say, here's how we're looking to approach it. Is that what you're looking for? And they'll quickly tell you. They'll say, yeah, that's great. Or they'll say, oh, well, actually, we wouldn't mind a bit more of an insight into product market fit, or a bit more of an insight into the tech, or whatever. And then that gives you a heads up to say, oh, I'll bring in this person or that person that can talk to that in more detail.
Absolutely. And that's such a great point in terms of actually understanding who you are about to speak to. And this is a problem that we've seen at Wholesale Investor in terms of the companies that sometimes come on board who are perhaps very technically minded and then don't have the resources that you do, perhaps, Peter, to get someone who suits a certain personality. So to the investors, and we'll go back to you, Stella, correct saying you do speak to founders quite often, perhaps asking questions and conducting your due diligence, and sometimes it is it is part of their duty to actually pitch you or your team, for instance. I'd love to know whether the advice you can give to the very technical founder who doesn't necessarily have the commercial savviness, or has needed the commercial savviness up until this point. Is there any advice to them on how to sort of gauge that down and to bring that side out as well? And is it of benefit to them? Maybe it's not. I'd love to get an investor's standpoint.
Yeah, I definitely feel like it's, as Peter said, know who you are talking to is very important. Then you can tailor the conversation or even decide whether it's worth to have the type of conversation that you're having, because it's really down to the fit. There are a lot of great companies out there that we wouldn't invest, not necessarily that there are not good companies. We sometimes love their business very much, but it's just not a fit for us because of our specialization. And then coming into how technical founders can elevate the pitch a little bit, I really love it when companies can do a demo for their product. It creates this experience for you to understand why their product is very valuable. Once we have a company coming in with a pack of drinks that they have produced that's not in the market yet, so you're the first to try, and you can, that kind of feeling really demonstrated what they are building, to give you a sense of who they are, what their value is, and what their vision is in the future, and get you the first taste of supporting them. I find that's a very, very strong point. And last, I think this kind of communications or pitch are always two-way communication. When you are showing your product to the investor, you are also assessing whether they're the right fit for you. So don't be afraid of ask questions. We love to ask questions as investors, and we love when other people ask us really good questions too.
Great point on the two-way communication and a product demonstration. That's an excellent point. HH, go to you. What do you think about this discussion around how a technical founder communicates to a potential investor? Does it concern you if they're too technical and you don't see that commercial side, or them spruiking the commercial viability up front? What do you think?
I think technical founders should stick to what they're good at, but I think more importantly, they should be cognizant of the fact that this is a gap in their experience, in their knowledge, and that they're willing to work with people that will help them to bridge this. I think there's nothing wrong with being a technical founder. The question really then comes about as to whether or not what they have has any real commercial value. I mean, we have had technical founders pitch to us with great products, but they only provide an incremental, a very small amount of improvement versus the existing systems. And you know that that's not going to fly, because the adoption requires a considerably higher barrier to entry. So I think I like talking to technical founders. We do a lot of investments in the quantum space. Problem with technical founders is that you can very quickly end up in a technical discussion, and then you lose sight of the fact that it is still a business at the end of the day. They're going to have to sell the product, and there has got to be a market for it. So if you're a technical founder, not just focusing on the product would be good, understanding what the market wants, what the market's willing to pay for it, and how you're going to get to market. That kind of stuff would probably get us a lot more excited than if you just came to us with, hey, this is a quantum device that's going to outsell everything else, and you're like, okay, I'm going to have to guess how that's going to work.
That's a great. I'm going to expand on that in a second. Michael, you see this from both sides. You've got to find the companies that come to you to pitch, but you also talk to the investors and perhaps have to relay that pitch as well, right? So, what with this communication, what do you think is the most effective form of communication for a very technically minded founder?
Well, whether you're technically minded or not, good communicators can sort of play in any field, and they make the complex simple. It might be pithy, but if you can't explain what the business is and what you're solving in a lack of intricacy that people can understand, you're missing something there. So that's a sign around communication. I think that is the most critical component. And then, the assessment process for investors is actually pretty, mostly standard, right? They're going to look at IP, they're going to look at the addressable market, they're going to look at the team, they're going to look at the technical components, and all of that is pretty standard. The founder doesn't need to cover all of that with their own skills. They need to be self-aware that their team's got to cover it.
That is so. You and HHA on the same point with regards to being cognizant of the fact that your skills may lack in some department, and are you aware of that is a good sign, and how are you going to fix that is even a better sign. Great. So the next question, it will be back to you, Peter, because I'm very interested in your journey to date. But one point that HH brought up was technical founders, or I'm going to get rid of the word technical, founders in STEM in general, often might get bogged down may fall in love with their products, but the product may not be the thing, or the service may not be the thing the market's demanding, and they don't understand why. It's like, no, but I still want to go with this. And I've spoken to an untold amount of STEM founders who resonate with that exact feeling. Did you feel that at first when you were developing your product, going through the R&D phase, and how did you sort of, if you did, how did you quash that and bring the commercial side out again?
It's a really good question. There's a cliche. It's a solution looking for a problem, right? That kind of sums up what we're talking about here. That we work in an industry where it's easy to fall in love with the things we do, right? It's to us, it's the world, but to everyone else, is it the world? Well, you'll find out when you enter the market soon enough. So it goes to this notion of generalist or specialist a little bit. And there's a bit of talk lately around that. There's books written on it. And there's no one size fits all here, right? There are multiple paths to success. And you look at very successful entrepreneurs, and there is not one size fits all. My background, I'm a chemical engineer, and I've been an entrepreneur for 17 years, and I've had previous companies and exits, but even though I do have that technical bent, I position myself as a generalist, right? That's how I see what I do, and because there's advantages that I feel I have as a generalist coming into this, because I can bring the team together. And I can fill gaps, and that's my job. That's what I do. So in terms of answering the question, I'm just giving context, sorry, to get to that point. But what I see often is a lot of work on the product, and an afterthought is product market fit. Is there a market for this product? So there's a real lot of development, because that's what founders are often passionate about. I have a technology I know really deeply, and I'm going to develop it. I'm going to debug it. I'm going to get it so good. And then secondly, is there a market for this? Or it's very surface. It's not very well thought out. So what we did as a company, we pivoted multiple times. We are agnostic technology. From a technology point of view, we're agnostic, right? I don't really care about the technology. We've landed on technology now, but through the journey of the last 3.5 years, we've moved and pivoted early. And I think that's really important, is that be prepared to not fall in love with any one aspect of your business. If the evidence dictates that you need to change. Be agnostic. Be about the solution. So what is it? What is the value proposition that you're trying to provide? Go deep on that. Really understand that, and then optimize a solution to that, as opposed to the other way around, which is go deep on this technology that I'm in love with, and then try and figure out down the track how it's going to give value to someone. And I just see personally a lot of that. I'm in love with my tech, and that's all I want to do, because the product market fit is nefarious. It's hard. It's hard to conceptualize. You can't see it, feel it, but that's the bit that's so important. And I think that's the bit that I think a lot of entrepreneurs would do well to really go deeper on that earlier. Yes. Than what they perhaps do sometimes.
Well, I saw that in your elevator pitch at the beginning, where you basically started with the severity of the problem, and then basically the competitiveness or effectiveness of your solution as the second half of that. Now, Stella, I'm going to come to you on this line of thought centered around product market fit and how to best delineate that to an investor. Have you seen that best represented or presented to yourself in an effective way? So let's bear in mind that there's a lot of founders in the audience who may be on their first, second, or third pitch. very early, at least in general. How do you think they could best present their product market fit to a sophisticated professional investor?
So there are a few different aspects to it. Maybe I'll divide it and give you a few selection of that. The first one that I think of is probably, what do you need to believe to be true? Because as I think one reason why companies need to ever change is that the market is changing forever. There is sometimes when you build a product and there is a fit, the market can change tomorrow, and it might be a very totally different story. So you have to have a very convincing idea and vision of your future, that your market, that your product will be fitting in. So that is probably one thing that I find quite powerful when companies mention that in the future, we believe that this is going to happen, and if that is true, then what might be true? We actually do that in our investment memo as well. When we are investing in a company, we're not only considering, say, the next year, but also the years to come, to think about what is a bigger future. And I think that's especially true in terms of the quantum investment, because the market today is going to be very, very different compared to the market, say, in a few decades. The second one is in terms of the product market fit. If you can find evidence or any background information to support that, that would be great. That can be customer verification. We always love to hear a customer success story or case studies. That's why investors often do a lot of calls with current or prospective customers to understand how they make the decision to go with your product and what is driven behind that. So that's probably the 2 points I find really, really important during the pitch process. I think that's also quite important for founders in terms of setting up the vision, as well as constantly adjust to the customer needs.
That's great. So in summary, I mean, obviously, I'm just a very brief summary for those watching as well is evidence-based thesis of each company, evidence-backed thesis, and of course the effectiveness of, I guess, proof, social proof, customer proof that it is effective. We're starting to see that this capital raising process is really a sales process, because that's very similar to a sales process, right? You talked before about the effectiveness of your DD process, and you said all the ugly things are going to come out anyway, and I'm sure your team will bring that out and really vet the opportunity as to whether there is a product market fit. But how have you seen it best positioned, I guess, with founders coming to present to you?
And I think it's a good question, and Stella covered quite a few points as well. We are in the emerging tech, deep tech space. The solutions that go to market may not go to market tomorrow. They might go to market after passing regulatory hurdles, FDA, so on and so forth. Even in the manufacturing line, you need your ISO standards to be passed and all that. So I think structurally, we have identified this as a weakness within the pitches, both by the founders as well as by the investors. So I set up a team called the Corporate Engagement Team, and this innocuous sounding team actually goes out and talks to corporate HQs of a lot of the biggest multinationals, because when you look at deep tech, the ultimate, or I won't say the ultimate, but the customers, the immediate customers are likely to be the multinationals, the big firms. You're not likely to be selling a quantum solution to the consumer market. So you don't really need to poll them for their opinion. But getting an understanding as to what the thinking of the board members of these companies are, the CEOs, the C-suite, where they're placing their money, what approach they're taking, enables us to very quickly decide whether or not the approach that this founder is coming to us with is the right one, or that it has the right fit. So we're not always going to get it right. Every investor, operates within the paradigms that they operate in. I'll give you an example. I recently turned down a a company that was looking at using scaffolding for ophthalmology for the degeneration of the cornea. And we turned them down because all the ophthalmology companies that we work with, Suntan and all that, were telling us, we are no longer looking to put things in the eye. We are looking at stem cell therapy and all that. So that's one where it's a case of the product might have worked. The product probably is excellent, but the industry has shifted to a completely different approach to the problem. So we decided to pass on that deal, even though I think the team was a pretty good one.
Wow. Oh, this is great because to the audience, I hope what they note down from this is, if you do have that market feedback at hand or armed with that market feedback, it's a very powerful thing when approaching sophisticated professional investors. Michael, with you, have you seen a very effective method or what is your process of ensuring it's a product market fit when you talk to your portfolio companies and those you've invested in?
Well, we're a growth stage fund, right? So we stay away from startups. And in one sense, we're doing that to de-risk, but in another sense, we're doing that to handle this question. I mean, 3 of the companies that we've invested in as a biotech fund already have products approved in the EU, right? And so we are going in to tackle the largest market going into the US, right? So for us, we have evidence of robust clinical data, and we have a plan to design a proper US clinical trial. So I'll stress that. I think specific to the biotech sector where there's high regulatory hurdles, what you see some companies do to try to address this problem of market validation or users is they might actually design a trial that is not really what's going to satisfy the FDA. So you might do a pilot trial in Australia with a small cohort and designed in a manner that once you take that to the US, there's no guarantee that that's going to succeed. So I think that's a big call out for cash-strapped companies in this sector, that you've got to be careful on how you design that stuff and get the right guidance and advice, because it might actually not only cost more in the long run, it'll cost time as well.
Excellent. Thank you, Michael. Now we're wrapping up, and I want to start with a bit of a fun, rapid question. And we'll start with you, Peter, from the founder perspective, and then we'll go to the investors on the panel. And we're going to talk about a major red flag when speaking with an investor. And it's weird to ask a founder that because with investors, it's usually all green flags. But a major red flag with an investor, and also any call to action to the audience today.
Good question. Okay, a major red flag from an investor. Look, I think if we're not just seeing a alignment of passion and excitement, if it's business as usual, if it's going through the motions, red flag, we're not interested. We're looking for investors that are in alignment with us and our culture and how we see the vision. So that would be one red flag that you sometimes see, just because, and that's mainly just not alignment. They're maybe in a different sector or whatever. You're gonna have to give me the second question again. Sorry, Sydney.
A call to action. There's an audience of investors watching as well. Anything you want to say? You want to redo your elevator pitch?
Call to action. Yeah, sorry, I was so engrossed in the red flag question. I
That's the filter. So the red flag's there to filter out the audience who wouldn't make it anyway. Now you can, to the ones who are still here, what's your pitch?
Okay, so we, as I mentioned, we are always in capital raising mode. Every week we are having investor meetings. We're going to a round that is around $30 million US. Just so that's for scale. So if you're an investor and you are, you're able to participate in a round around that sort of size, then reach out. We've got LinkedIn is probably the best way. We'd love to talk to you. And we're transforming precision medicine. That's what our technology.
Can you give us the elevator pitch again? Because it was really good. I like it. Yeah.
Oh, now you're testing me.
It was bringing preventable deaths down to zero. Something.
Yeah, the vision is a world of zero preventable deaths due to a lack of timely molecular patient data. And put that in perspective, literally hundreds of thousands of people die every year because clinicians lack that data. And that's the truth. Sepsis, there's a whole range of disease states where people die because they don't have this data. And that's the gap we are filling, and we're doing it right now. So that's the exciting future that we're working towards.
Thank you, Peter. Thank you. Stella, a red flag when being presented to by a potential investment opportunity.
I propose that we do a reversing order because shall we get Michael to speak first?
Okay, Michael, do you want to go first? Stella's put you on the spot.
Look, I mean, a red flag is just around honesty. You know, it's actually okay to be challenged with a question and not know the answer, rather than evade that. Just be upfront and then circle back. You know, go back, do the research, and find the answer and reconnect. You know, that's fine. So sometimes, as an investor, it's about seeing how people react to stress in the situation, and just be honest in that situation. And look, for Horizon 3. We are raising $100 million, so we're out raising capital. We've deployed $8 million to date. We're on Wholesale Investor because we're looking for the last 12. We've got $88 million of commitments, and we want to close at 100. And we're here to leave a legacy. You know, like everybody on here, we're here to make a lasting improvement in the world. And we believe the future of biotech is brighter than the past. So it's a sector that's outperformed in the last decade. It's going to continue to do that. So I think no matter how you invest in the space, whether it's via a fund like ours or in the listed market, we think the future is incredibly bright. And so we'd love to partner with you on it if your value is aligned with us.
Thank you, Michael. Thank you. HH, red flag and a call to action.
Yeah, I think red flags, there are just so many of them. I think I'll just take from the experience of our own portfolio. The truth is, you know, we have written down about 5 companies in the last 5 years. That's not a heck of a lot for STEM, but nonetheless, you know, we learned lessons from the 5, and that none of them were ever written down or shut down because of either the tech or the market opportunity. And it was always because the founders couldn't get along. You know, founder dynamics was the key reason why a lot of these companies fell apart. And we should have known that early on, because during the pitches, we had founders that sort of, you know, interrupted each other. We had founders that would sigh when the other one was talking, and that was at the very early stage. So, you know, we have sort of picked up on some of those non-verbal cues as to, you know, perhaps they might have the greatest product, they might have a great market opportunity, but if the founders can't get their act together, you know, it's just going to be, it's just a recipe for disaster for all of us. So I think that's a major red flag for us. In terms of call to action, you know, we are global investors. We invest all over the world. So far, not yet in Australia. So if there are opportunities to invest there, I think that we'd be open to that. Because we don't lead rounds overseas, you know, we would be open to participating in rounds where there's already a lead investor that's priced it, and can more closely help the companies that are on the ground. So I think that's pretty much about it from me.
Thank you, HH. And Stella, back to you.
I echo HH's answer in terms of the founder alignment. We find usually a good team is what it takes to support each other in difficult times. I guess probably another thing that we have been talking about a bit more now is the learner versus knower mindset. Learners are the ones who can adjust and happy to take in suggestions with an open mind. Knowers are people who feel like they have the answer to everything, which is a very dangerous mindset, because there are so many new informations coming in. I think being able to leverage on other people's help as well as advice and have a very open mindset as a founder is quite important. In terms of call to action, Similarly, I think if you're interested in what MenSequence is doing, which is to solve greatest challenges with science and build great companies, feel free to subscribe to our newsletter or follow our Twitter account. I'm also happy to chat if you are interested in learning more about our funds or wanted to pitch to us. Feel free to reach out. My email is stella.zoo@mseq.vc.
Excellent. Guys, and look, this has been an unbelievable abundance of information and wisdom you've given to the audience today. We really do appreciate it. Thank you all for joining us. We will have your details with links to call to actions at the description of this video. And yeah, look, again, thank you. And to the founders and investors in the audience who are watching this, we will be obviously digesting this information and distributing it to them as well. And please feel free to reach out to anyone who's been represented on the panel today, if you do pass their red flags, that is. Thank you all, and hopefully we can have this sort of discussion again in the future. I appreciate it.
Thank you all.
Great, thank you.
Thank you.